Um, so to get the most out of the webinar this evening, we will be recording this. So just a little bit of housekeeping. Your microphone and camera will stay off for the duration, so we can't see or hear you. If you've got questions, and I hope you do as we go through this, please do use the Q&A function, which should work in the panel at the bottom of your screen, or it may be the top, depending on where you're looking at this from. We have an hour and a quarter booked in for this, and the reason that we booked slightly longer than the normal time slot is to try and get a bit of discussion, a few questions going towards the end of this, and hopefully you'll find that quite useful. We have obviously, I'm Sam from Suffolk Wildlife Trust. Probably should have led with that. I'm the Wild Landscapes Manager, and I'm working with Daniel, who's joined us as a panelist this evening on the Waveney and Little Ouse Landscape Recovery Project, which you'll hear all about shortly. We're also joined by Phoebe from the Green Finance Institute. Phoebe will be introducing the Investment Readiness Toolkit that the Green Finance Institute have. If you've received the invite for this on the PDF, hopefully you've all had a look at the link for the Investment Readiness Toolkit and you're very familiar with it and think it's fantastic and want to learn all about it. Once Phoebe's spoken to us, she's going to speak first. We've then got Tom Curtis along from Three Keel. We're working with Tom and Three Keel in the Waveney and Little Ouse project, developing our blended finance approach. So it's a landscape recovery pilot, and we're developing that approach at the moment. Tom's going to talk about what Three Keel have done already through the landscape enterprise networks, give some examples, explain how those work, looking at, and I don't know if I'll get the terminology right, but the sale of ecosystem service functions and how they amalgamate into saleable assets. So we've got a few on the call. I think we'll crack on so as not to waste any time. And yeah, hopefully the numbers will build up a little bit. I appreciate 7 o'clock in the evening is a bit of a funny time to get things started. If you do hear shouting in the background, please say it's bedtime here, so there might be all sorts going on. So without any more from me, Phoebe, if I can, over to you.
Absolutely. So yes, hi everyone. My name is Phoebe Tucker and I am a Nature Associate at the Green Finance Institute. And I work within the Nature team of GFI, and for the past 6 months or so, my main focus has been on the Investment Readiness Toolkit, which I'm really excited to present to you and get your feedback on, use as a pitch as a resource for thinking about environmental markets and nature finance in more depth. So before I go on to that, I just want to cover off a little bit about GFI and the Nature team. If we could move to the next slide. The GFI is an independent and we're an independent organisation. We were seeded by government funding in 2019 to help the UK transition to a net zero nature positive state. So we don't have a balance sheet or a commercial product that we sell. What we do is we go into sectors and we identify what are the barriers to private finance flowing to certain sectors such as transport, buildings, and nature, which is my team. So our mission is to mobilise private finance into nature positive activities and nature restoration at scale. And we're aligned with the Treasury's ambition of at least 500 million in private finance to support nature recovery annually by 2027. And that figure rises to 1 billion by 2030. So the Treasury, the UK government has some very punchy targets. And we're basically aligned to that target to help the private sector reach that goal. And what we do is we divide everything in the Nature team into these 3 mission critical factors. Very simply, that's demand, that's market infrastructure, and supply. And the Investment Readiness Toolkit is a main offering that we have in our supply bucket. So what we know needs to happen to reach that 500 million, 1 billion target is that there needs to be a supply or a pipeline of projects that are actually ready to accept private finance. So we work with landholders such as farmers, local authorities, estate managers, corporates in some cases, and ENGOs to think about how they could use their land to deliver environmental services and how they can use private finance in that equation. So we have the investment readiness toolkit, and just to touch on briefly what I mean by investment readiness, because it's a confusing term, could we go to the next slide? Yes, so basically what we term investment readiness really just means that a project is ready to accept private finance. And we distinguish the role of private finance into two buckets. There are investors who give upfront repayable finance, and then there are buyers. So the people who are paying for an ecosystem service, such as carbon credits, nutrient reduction, biodiversity net gain, natural flood management. And that's a really tricky term for some, because buyers often like to call themselves investors. Investors sometimes don't like to be identified as investors. So really we have this equation of the sellers who have the land, the investors who are providing the upfront capital, and the buyers who actually are benefiting from the natural environment outcomes. And so when we say investment readiness, we really mean that a project is profitable in that it can meet all its financial obligations, that it's delivering high integrity environmental outcomes, and that it's secure. So any risks to the project are mitigated, managed, or compensated. And so investors really are looking for those three things. But as we make clear in the toolkit, not all projects who are on this journey actually need upfront investment. Sometimes they can just get the buyers to pay early enough to deliver the project and meet all the project costs, or they can access grant funding, use their own savings, etc. So we really title investment readiness as a broad term of being capable to accept private finance. Next slide, please. So in terms of the actual toolkit, just going over very briefly how it was seeded, how it was conceptualized. We basically were an advisor and assessor to the Natural Environment Investment Readiness Fund. And in our prep work for that, we spoke to a lot of landholders and project developers who were considering using private finance. And we noticed that there were a series of milestones that every single one of those projects were hitting. So no matter where they were in England or in the UK, and no matter what kind of environmental outcome they were delivering, they were all tackling the same activities, same broad categories of activities, and facing similar challenges. So we really thought about what would help the pipeline of projects in the UK to scale up. And we decided that it would be a good idea to develop a common framework of thinking. So we've worked with the Natural Environment Investment Readiness Fund. We've worked with projects that are probably well known in the UK, such as the Wyre and the Poole Harbour Nutrient Management Scheme. And we've tried to pull all these learnings, best practices and blueprints into one place. So that is the origins of the toolkit, and we've been developing it for around 9 months, 6 months, 9 months before launching it in December. So if we could go to the next slide, we have the toolkit in its current form, and that is what you see in front of you is what some people like to call the snake, which I personally love. It's a series of 8 milestones that take you on the journey to investment readiness. And what this means in practice is that it's an online and interactive framework that's applicable for any project developer in the UK, whether they're a farmer, a charity, a local authority, or an estate manager, whoever has influence over land use and is interested in delivering environmental outcomes with private finance, they can benefit from this toolkit. So very quickly, each of these milestones, if you go to the website, they'll have a list of key considerations, useful links, case studies, webinars that are basically designed to show you what other projects have done in the past and what their key learnings have been. So another key call out here is that the journey to investment readiness for all these projects, they may be we've linearized their journey here for ease of learning, but actually every single project that we meet has a different sequence of events. Sometimes they tackle lots of milestones at once. Sometimes they get stuck on one for a while. Basically, every project developer's journey to investment readiness looks differently. So while we've designed this snake to be linear, it's important to call out that it's non-linear in practice. And we've really tried to design the website in the hopes of it being very interchangeable, very navigatable, and it would appeal to a broad range of people. So if we could go to the next slide. So I'm just going to very quickly break down the first 3 milestones and give you a sample of what we mean by the considerations. So these considerations contained within each milestone are basically a series of questions that you might ask yourself at each stage. So initial project scoping is definitely the chunkiest milestone of the toolkit. And you might start by assessing the current state of your land. So is the size of your land relevant to having an investment readiness project? That's a common consideration because within the topic of nature finance and environmental markets, scale is really important in many cases to delivering economies of scale, appealing to buyers. And so within farmer clusters in particular, we get a lot of conversations about how farmers can best work together to pool their land. And that isn't necessarily a strict requirement. In some cases, there are examples of farmers and smaller landholders working together, working independently. Such as in the case of nutrient neutrality, you might only need a couple of hectares to develop a wetland that you can then use to deliver nitrogen reduction. But what we've seen in this space is that it's really great when landholders work together and they take a holistic view of the catchment or the landscape that they're in to not only pool their land to reach the scale needed to attract buyers and investors, but also to deliver the best outcomes for the environment itself and for the sellers themselves. So when you're in a larger group, you often have more agency, more buyer power, more seller power, and other advantages. So we stress this point of aggregation in quite a few places. Then you might look at the appropriate land use. So what is the local or regional nature recovery strategy in your area? And if you have neighbours with land bordering the site you're working on, what habitats, what features of the land are connected to the site that you might want to work with, such as developing a biodiversity corridor. Then you move on to legal ability to change the land use. So of course, if you've got a legal agreement with the government, for example, to say that you have to deliver something environmentally, you're really not going to get a private buyer coming in paying you more money to deliver that same thing. And then I know that the other part of this equation is tax. So I know that a lot of farmers and landholders are wondering about the tax implications of land use, such as losing agricultural property relief in their inheritance tax. The fourth bucket of considerations here is the feasibility of attracting private finance itself. So what revenue models can you work with? Are you going to sell carbon offsets? Is there a mechanism to sell natural flood management? And then has this been done before? Are there similar projects that you can work with or understand the revenue model? Yes, that is a big one. And we hope the toolkit in of itself will help demonstrate precedent where there is such precedent in the UK. And then the last one is funding project development. So putting together all these questions can sometimes take time and resources. So what kind of costs are you going to incur in the first few steps? Are you going to pay for a natural capital account on your land? Are you going to have to conduct buyer research? And if so, who is going to pay for that? And what individuals and organizations will go forward and represent the project development team? So next slide, please. That's definitely identify project scoping is definitely the one I wanted to spend the most time on. So I'll move through these next ones a little quicker. Identifying and working with sellers really means the landholders that you're working with. So in terms of identifying a need for multiple sellers, you might think of the existing data sets that you have to identify sellers, or mapping sellers. Is there an existing farmer cluster? I know that's an obvious question to ask this group, but that's something that we want people to think about. And then in terms of approaching sellers, we know that some landholders have preconceptions or ideas about environmental markets and natural capital. So it's important to understand those. And then the land tenure of the landholders as well. So whether they're a tenant farmer, what kind of tenancy do they have, or are they an owner occupier? That is also a key consideration. Ongoing engagement with seller groups, it's important to understand their risk appetite, for example, and the responsibilities and the expectations you're setting when you launch a project. And then finally, pricing discussions are really important. So what exit strategies would you provide sellers if they were to engage with your project? And should sellers receive compensation during the project development phase? So those are just a couple of examples. We could move to the next slide. And then baselining and estimating ecosystem services themselves, we've got the choice of methodology that you use to benchmark your actual site. So are you working with the Woodland Carbon Code or the Biodiversity Net Gain metric? If there is no appropriate standard or code, what do you do then? And then planning the new habitat, what kind of ecological expertise are you using? And is that right for the site? And then how are you designing your site to prevent leakage of environmental damage? So how do you know that you're not outsourcing the environmental damage of your site to another part of the catchment? And then post-implementation planning, that's really about making sure that when you install the environmental intervention, so when you restore a peatland or you plant a woodland, does that require a risk matrix? And how are you going to monitor the site over the course of the project? So yes, that's just a really quick canter through the first 3 milestones of the toolkit. And those are a few examples of the considerations that you might encounter within each one. So if we could go to the next slide. I'll now show you what the toolkit actually looks like in practice, because I know I've run through a lot of information, but we do have an actual site for you to go to and browse at your own pace, at your own leisure, so you can explore these considerations in more depth. And I wonder if I can just steal the screen share away from Sam. Very good. Okay, perfect. So very, very quickly, let's see if I can do this. Excellent. So this is the website itself, and it's online, it's free to use. We're really keen to make this as accessible as possible. So you get to the landing page and you scroll down and you can see instruction on how to use the toolkit and the snake diagram itself. And you can see that it's interactive. So this feature will be present on basically every page of the toolkit. So if you want to jump from initial project scoping to working with buyers, you can do that. And that's representative of how we know projects don't follow a linear path. We define investment readiness down here. And then, that's what I was talking about earlier, the difference between investors and buyers. And then we just have the option of feedback and further case studies. So very quickly, because I think I might be running a bit over time, I'll go to initial project scoping, and every milestone on the site is set up in the same way. So I'll only go through one. You get to initial project scoping, and here you see these buckets that I previously showed, all the different considerations you might have. So all you need to do is click on them and you open up the answers. And basically, I say answers, really, there is no answer that's common across every single project, but it's just a little bit more rationale as to why this is an important question to ask yourself. Alongside every milestone, we have case studies, which are really important. So Cornwall AONB, Esk Valley, Wendling Beck, all these case studies actually are farmer-led projects or farmer-focused projects that have reached this stage. And so you can read about these more to understand how they approached project development and what their barriers were, what their solutions were, key learnings, etc. The checklist is just a very simple Word copy of all the milestones considerations. And so that is a Word copy that you download and you can fill in with your own thoughts, your own workings. And then there's a section of useful links that project developers have said have been instrumental at that stage. So this is just a supportive list of external resources that you can use. And then just very quickly, we also run webinars on each milestone that you can watch back to understand more about project developers' views and how they experienced each milestone. So that's basically the website in of itself, and I'll stop sharing there. I'm very happy to post that quickly in the chat so that everyone has that link, although I think the link has been circulated before. In terms of next steps, though, I just wanted to very quickly highlight the fact that the Investment Readiness Toolkit is an iterative resource, and we'll be adding more case studies, more learnings to it as this space develops. So we're really keen on having it represent the latest in thinking around environmental markets and project development. What's really key to know is that the GFI have recently done a farming and finance report that was aimed at government for farming to basically what's needed to help private finance flow towards environmental farming, regenerative farming, help the food system basically to transition to a more net zero nature positive state. And off the back of that, DEFRA have now commissioned us to design and deliver a toolkit that's bespoke to farmers. So this toolkit that we're developing right now will be aimed at farmers specifically who want to access environmental markets. We're going to have a look at all the considerations we've listed. We're going to run focus groups, write more case studies, basically hone in on what farmers need to know and should know when they're considering nature finance in environmental markets. So we're at this really critical stage of thinking about what that content looks like. And it would be great if any of you are interested to get in touch and tell us your thoughts on, you know, when considering environmental markets and using private finance to deliver environmental outcomes instead of, say, government subsidy schemes or philanthropic donations. What are your thoughts? What are your considerations? What challenges are you facing? And what are you thinking in terms of solutions? So we're really, really keen to hear your thoughts. And so I've been really delighted to be here and speak to you about the Investment Readiness Toolkit, because in summary, a first edition of what's to come. So yes, I think I may have gone a little bit over time. I'm sorry about that.
No, I think you're just about right on. It was 5 or 10 past before we started, wasn't it? So perfect. Thank you for that, Phoebe. It's really enlightening. I remember the first time I heard you talk through it all. I thought, brilliant, this is exactly what we need. And I know we've used it ourselves in the landscape recovery development and thinking, and just gone through all those checklists to make sure that we're ticking off all the things that we need to do. So it is a really useful resource, and I'd encourage everyone to go and take a look and use it. Yeah, excellent. I think my favourite quote was, "There's no answers, but lots of important questions." So we'll make sure we write that one down, and we'll make sure that your contact details are available. Perfect. Thank you very much. I will hop back onto the screen share, which is now this one, isn't it? I think. Hold on. Yeah, perfect. And then, okay, yeah. So there's the link and Phoebe's contact, and then we'll come on to Tom from 3Keel to talk all about landscape enterprise networks. So this webinar has been pitched as theory and practice, and my thinking is that the GFI and the Investment Readiness Toolkit is the theory, and then Lens is one way that this is working for groups of landowners at the moment. So thank you, Tom.
Brilliant. Thanks very much, and thanks, Phoebe, so much. The GFI resources are really, really practical resources, and great demystifiers. So I think, I really commend them, and I think they're fantastic things. So yeah, I'm Tom Curtis. I'm one of the founding directors of a sustainability consultancy called 3Keel. And one of the areas of our work, I kind of do the kind of a lot of the farming and forestry side of things at 3Keel is the kind of sections I'm most interested in. And we developed something called the Landscape Enterprise Networks approach, which is essentially environmental commerce. It's a mechanism for constructing and developing marketplaces which link buyers, specifically as Phoebe defined them, actually, buyers of landscape outcomes or ecosystem services, as they're sometimes called, and people who can deliver or sell those outcomes, usually farmers. And essentially, what the Landscape Enterprise Networks approach does is it builds consortia of buyers, different organizations, food companies, food manufacturers, water companies, local authorities, different sorts of organisations who, for different reasons, can club together to buy similar packages of nature-based solutions or regenerative farming methods which deliver against their different needs. And because they all have different needs, maybe it's resilient supply chains, it could be water catchment protection, it could be flood resilience, it could be water quality, it could be drought resilience for crops, those different or carbon performance. Because they have different needs, we can stack those needs together and they can pool their resources to pay for those outcomes. And essentially what we're doing is we're grouping together, aggregating buyers on one side and sellers on the other side. It's good for the buyers because they get to cost effectively and cost efficiently procure outcomes from landscapes which they have skin in the game of, that matter to them. And it's good for the people on the selling side because ultimately it provides additional sources of revenue, sources of business for them to engage in and to sell different outcomes from their land holdings, different and new sets of services that are transacted in addition to and separate from the commodities and farm products that they produce. And in terms of the sorts of things we transact, the vast majority of actually what we do is transacting interventions which adjust the way in which crops are produced. So it's not an instead of thing. We absolutely fund habitat infrastructure, but what most of our stock in trade is within the productive farming realm, and virtually all of our transactions involve food companies. But essentially, we've done this. The other key thing to know about it before I kick into a bit more detail is we've developed this in a place-based manner. These marketplaces are run within regions, and we've kind of built it and invented it by doing it. And we're transacting. We've got about half a dozen very active trading regions now across the UK and Europe, and probably a similar number that are coming up to starting to trade. And we started fairly small. 3 years ago, we were probably transacting in total about £1 million a year in ecosystem function transactions. That's kind of doubling every year. We'll transact about £6 million worth this year. It'll double again next year. That's the kind of growth trajectory that we're on. So not earth-shattering numbers at the moment, but real figures, the sort of things that corporates don't part with just to dabble. These are real meaningful transactions happening now, and that money's going to farmers. Okay, next slide. And I think some of these are animated, so you might have to click a few times, otherwise we'll be at it for a while.
Yeah, no problem. I just want to check, have you got the right share there? Are you looking at presenter view, or are you on the... What can you see?
Do I click through it? Hang on.
I don't think so. I think I just shared the wrong screen. I'll just try and sort it out.
Yeah, no worries. No worries. People will have had a sneak preview of the next slide, and that's fine by me. Great. Yeah.
Okay. Sorry. Let's try again.
You had it working at the end there, Sam.
That should be better. How's that?
Yeah, there.
Excellent.
Yeah.
Well done.
So essentially all you've got there is a map of our different active trading regions in which we're transacting lens within lens.
Right, we'll crack on then, Tom, if that's... Yeah.
Brilliant. Yeah. Next, click on from there. Yeah, that'd be brilliant. Yeah, and maybe give us 3 clicks. To fill this one up. And there's a little diagram to the right there. You might as well get that up as well. There's a few components to it. I'll just quickly go through this. I mean, essentially, Lens is constructed for both the supply and the demand side of this. It's constructed to serve both sides of that equation. But in order to be able to make money flow, we have to understand the needs of the demand side, understand the needs of the customers, essentially, who are going to be the paying customers of those supply side farmers. And essentially the way we present that to our supply side, to the food companies, to the water companies, to the insurance companies, to the local authorities, whoever it is that's putting the money up here to buy outcomes, not to invest in a finance sense, but to buy outcomes, is we say it enables them to share the costs of these landscape transformations. So they're not individually having to stump up the full costs of them. And also what we tend to be doing for them is we're creating solutions which address material risk to their commercial activities. So these are things that give them direct value add. It secures their supply chain in the face of drought or input cost fluctuations. It helps them with their with securing their water resource or water quality. It can help with flood risk management. Practical things that matter to their businesses. That tends to be the flavour of what we've built our marketplaces on, as opposed to more credit-based outcomes, essentially, or offset outcomes. These are practical outcomes. Both are important. That's just what we focus on. And importantly, Lens does this in a way which is place-based and has local governance and as legitimacy amongst all the different stakeholders. Lens marketplaces are ultimately owned by people on the demand side and people on the supply side and people from that locality, in order to make sure that they're relevant to and accountable to those localities. And that's the case in Cumbria, it's the case in Yorkshire, east of England, across in Italy, Hungary and Poland. Essentially what's going on, this funny old diagram on the right here, which is probably more confusing than helpful. Essentially, the yellow box here is saying, look, there's risk that comes, there's all kinds of problems when landscapes are underperforming or at risk through climate change or changing conditions. But that represents risk of underperformance for businesses. And those orange boxes are businesses, and different businesses will receive different risks as a result of that. Some might not get feedstock into their factory. Some might have infrastructure inundated with water. Some might have problematic water quality and water courses. But that risk represents a problem for them, represents a problem for their investors as well. Their finance and reinsurance providers, and that can affect their costs of debt and cost of borrowing as businesses. So they need a solution. And actually what Lens does, it says, look, where your needs overlap in the same solution, we can fix up and find you solutions. We can find shared landscape solutions for you, and that reduces that risk from underperformance of landscapes, and that's where you get your benefit. That's the deal we're offering to them. Okay, next slide, please. It all started here. It all started in a place called Dalston up in Cumbria, which is where our first Lens was kind of invented, if you like. That we were working with a company called Nestlé, who've got a massive milk factory, milk processing plant there that sources all of its milk from within 50 kilometres. Dalston is near Carlisle, at the foot of the Eden catchment. And essentially, we were working with Nestlé more broadly and globally to understand sustainability-based risks to their business. They were interested in sustainability risks to individual factories, and we worked with them and rapidly understood that the performance of the surrounding landscape was critical for the ongoing supply of milk into that factory. Basically, the soil and the habitat features on farms that produced milk for that factory ultimately were existential. They underpinned Nestlé's ability to run that asset, that multi-100 million pound asset, up in the top right-hand corner there. And so they had a business case there for looking after soils and looking after habitats that would then help them manage soils, manage soil fertility. They help their farmers to do that, and therefore produce a reliable source of milk into the factory. And essentially what we were realizing there was that there was a strong business case for Nestlé, a very prosaic, straightforward business case there for them to look after environmental assets outside of their factory, because they meant viability for their factory. So that's the first thing there. We construct the sustainability product, the environmental product, based on the customer's need. And so we sell our ecosystem functions or our nature-based solutions based on customer need. And in this case, the primary need was, we need milk to carry on coming into this factory for years to come. Next slide. Actually, as well as securing milk supply into their factory, if you look after the soils and actually go back one there, I think we bobbed forward to. Yeah, thank you. as well as the soils and habitat features being important for securing milk supply and the long-term viability of the farms that Nestlé depends on for that factory's long-term viability itself. Actually, by looking after soils and looking after habitats, we're also doing other things that mattered to the Nestlé factory as well. That factory doesn't flood, but properties around it, infrastructure around it does flood. And so workforce getting into the factory and out of the factory, and product getting in and out of the factory is affected by flooding. So there were other functions from looking after the soils and habitats that were looked after, and also greenhouse gas emissions could also be influenced by better nutrient management and better soil management. And so that meant that Scope 3 emissions were improved. So rapidly we spotted that actually the business case for land management interventions in that locality were actually propped up by more than one business case, and that made it an easier sell to Nestlé, because actually it's giving them more bang for their buck. Next slide. The next key realization, and these are all basic precepts of Lens. You construct your product in the landscape based on your customer need, based on an understand, or you frame your product in the landscape based on an understanding of customer needs, so that you can design product for them. Make it multifunctional so that it's funded by lots of different motivations, because that makes it more business. It gives it an easier business case, or gives it multiple business cases. It also actually makes those outcomes more resilient and a better product to sell, because you've got multiple reasons why someone's paying for it, as opposed to just one. Really important. But then the third element of it was we rapidly understood that not only did Nestlé have an interest in those landscape interventions in soils and habitats in that region, but other companies did as well. So United Utilities, for very different reasons, was interested in phosphorus levels in the water supply and some point source flooding of some of its infrastructure. And essentially that gave them different reasons for investing in the same set of functions, set of interventions on those farms in that landscape. And so actually we started Lens by getting Nestlé and United Utilities to pool resources to fund outcomes in those landscapes, to fund soil management, regenerative farming methods and habitat interventions. And now we've got the local authority with a big flood spend budget pooling in, co-funding in as well. And so what you get there is several organisations funding multiple functions through the same packages of ecosystem of nature-based solutions and regenerative farming solutions. And what that means is you've got multiple customers, which is great for the farmer. It means you've got more money, and it means you've got more cost effectiveness on the demand side. And actually, once you start to get to that, then you get other buyers coming in and other sellers coming in, because people start to see there's value being delivered, and there's value and there's money to be made from doing it. And so you start to construct just a straightforward marketplace. Okay, next slide. I'm probably I want to trot on a bit. Oh, this is just something which talks about the fact that that within Lens we analyze the opportunities by understanding who are the landscape beneficiaries, what are the organizations and sectors that have a stake in the landscape. What are the functions, the outcomes from landscapes like flood risk management or commodity production or recreation and beauty or water quality? What are the functions they require? Often they have similar functions that they're interested in, so that's great. That provides collaboration potential. But very, very often, actually, it's the underlying asset, the natural asset in the landscape that they have a shared interest in. So it's a second order question where we can build a consortium. So it's actually different reasons for funding, but actually they alight on the same asset in the landscape that they might want to put money into. And that's how it's that second order question, that network analysis that gets us to build our coalition and say that actually, funnily enough, these two companies, completely different sectors, have an interest in the soil on your farm, and therefore we can get them to pool resources to pay for interventions in there, to work with you to come up with solutions that they'll pay for their issues, which might also be really beneficial financially, but also in terms of long-term strategic development of a land holding. Okay, next slide. at the heart of Lens, there's basically the building up of a value chain, a chain of transactions, essentially. And if you do a click there, what that starts with is us understanding business needs. We understand the needs of the businesses who might pay for something within a landscape, and we understand multiple business needs. And if you click again, sorry, it's a very clicky slide. What the job of a regional Lens marketplace is to understand those different needs, and then to spot where those needs intersect, where there are essentially similar landscape assets or packages of measures in similar locations that could serve all of their needs. So we convene those businesses around those common interests. And then another click there. Having done that, we can build a technical understanding of their needs and essentially build a specification for services that says, look, if someone could deliver something in these landscapes that does these things, then these guys over here are likely to pay for it. They're likely to pull their money and pay for that. So what can you do? So then next click, we put that to a supply aggregator. That's an organization that can work with work on behalf of a group of farmers, a group of people managing land, to put together a proposition against that demand specification, essentially to say, look, this is what we can do. This is the kind of price we can do it for. And this is and the reason we work with the supply aggregator on that side, and that could be a farmer cluster, it can be an NGO, it can be a grain trader, it can be a farmer co-op. In Cumbria, for example, the first one was with this First Milk. They're a farmer cooperative. We work with Eden Rivers Trust up there in east of England. We work with grain traders, people who have access to farmers that can work on behalf of a group of farmers to put together a group of actions. That's really important because it means that farmers can ultimately be collectively negotiating, so they're not being divided and ruled and pushed down on prices, so they can get good, stable, high quality outcomes. Very many of ecosystem service outcomes come at the scale of multiple farms anyway, so actually being able to collaborate is really strong. But also it just simplifies the transactions. It reduces the number of contracts we need to deal. So anyway, having negotiated that you've got the right product and the right sort of packages of measures that deliver against the need, next click, we essentially transact. We cut a deal. And that's not based on any ecosystem service valuations or anything like that. It's a commercial deal. Ultimately, what it represents is good value for money for the people on the demand side, and a profit for the people on the supply side. Like any deal, like any product, it's a commercial transaction. And if there's an envelope of possibility where it's cost effective for the demand side and it makes business sense for the supply side, then somewhere in that envelope of possibility is room for a deal. And deals we get, many of them, and essentially it needs to work for both sides. But this is a business to business transaction, aggregated through demand aggregator at one side and the supply aggregator at the other, essentially. Okay, next slide. So that's basically how it works. Over time, well, click on there first. Over time, we turn that value chain that I just described, that collaborative chain of transactions, well, we can grow it. Having done one, usually we start with one in a region. We kick off, and then we can make it bigger the next year, and we certainly do. But we can also build additional transactions in that same region and build up a whole network of those transactions, delivering different packages of different sorts of outcomes for different groups of buyers and from different groups of farmers, essentially, from multiple supply aggregators on that right hand side over time. And so you start to build up a marketplace, and that can evolve and adapt over time. Right hand side, another click. As that happens, we start to get quite a lot of complex transactions going on, quite a lot of relationships happening, and at that point, and this is what we're doing right now at the moment in the UK marketplaces, is we say that needs formalised local governance, and so we establish the Lens operator in that region, the marketplace, the intermediary, if you like, the broker, as a local social enterprise mechanism, which has local person or people running it, initially with our help, but ultimately running it. And that has governance, a board essentially of which represents both supply and demand side, and then has local representation from civil society, NGOs, in order to make sure that it's accountable to the locality, but also is balanced and acting on behalf of both buyers and sellers. And that's absolutely critical from our perspective in order to make sure that these marketplaces grow and serve the people that are engaging in them, and also serve the landscape and communities who live in those locations. Okay, next slide. Yeah, well, as I said, we're doing it across all these different landscapes, and across the UK, we've got multiple food companies, multiple auto companies, insurance companies and local authorities in various combinations, co-funding measures. In Italy, we've got a food company and we've got the Prosecco Consortium co-funding measures, fascinatingly, where vineyards and arable farms are actually co-located. Prosecco is such a valuable crop that's grown off the hills now and on the lowlands there, and so we've got combined measures there, and then various retailers and food manufacturers across other parts of Europe, and we've got a couple of big lenses coming into action up in Scotland soon as well. So it's really growing, and it's really you know it's really, yeah, it's making things happen. We're transacting, as I said, about £6 million worth of transactions this year. We'll double that next year. This is all cumulative. So it's based on practical experience. Next slide. Just contextualizing it in that wider picture of green finance, what Lens is doing. It's only doing part of the picture, really. We're putting buyers and sellers together to create revenues. That's the bit that we're really cracking. Let's do a couple of clicks. So basically, there's a bunch of different things you can do in a landscape which deliver value from a provider through to a customer. That's basically what we're talking about here. You can do things in a landscape, and that delivers. The provider can do those things, and it provides value to a customer. Next click. Basically, the customer pays for those. That goes into the cost of delivery, but also there's a profit there that goes into the provider. There's your revenue stream. That's ultimately the business model, isn't it? It really is as straightforward as that. Now, there's different ways in which there are different types of outcome you can sell for a profit. Next click. And that's environmental commerce. A click after that. Sorry, I don't remember my own slides. Basically, do value. We in Lens do what we call value-based transactions, things that provide direct value to those customers that they need them for crop resilience, for input resilience, for feedstock resilience, or water catchment services. They directly matter to them. There are other really important outcomes as well. Next click, which are more fungible or credit-based transactions like carbon or biodiversity offset products, and those too can be sold from landscapes. And I think it's really important when we're thinking of the sorts of things you can transact from a landscape, is that it's usually an array of different sorts of marketable functions for different sorts of customers. And actually across a single landscape, there'll be multiple different things you can sell, and actually multiple different packages of things which will go through different commercial or revenue generating routes. And it's just we're not just one product pathway, essentially. And I think that's really important. We need to be entrepreneurial about selling the different outcomes from a landscape and combining them and stacking them as effectively as possible to maximize outcomes. So that's the commerce, and those are the buyers as Phoebe had them. And then there's the capital up front, which can play a role. And next click. So that's the kind of finance set, but obviously Phoebe would split that in two, which I think was really sensible. But basically, you can conceive of situations where sometimes to put that product together, you need capital up front to help establish the product supply. And what the finance people want is a slice of that profit. They'll take an interest rate off that, won't they? In Lens, actually, we've transacted 10 odd million quid's worth of revenue to date, and actually haven't required any capital up front to do any of that yet. But we could conceive of situations where certain products might well require capital up front. And then I guess the other area we see environmental finance already trying to operate is next click. is speculating on some of the credits that are produced off these things. So seeing some financial institutions buying and selling, carbon credits or biodiversity units and just playing in that space because they think they're going to increase over time. And it's just, being aware that I think that happens too. There's some people in that game too. Lens though is basically in that bottom left-hand column part mainly. But if you're looking across the landscape, certainly I'd be engaging in both parts of that environmental commerce. And if there's a blocker in terms of, well, we need some capital up front and we haven't got enough revenue in to cover ourselves, then that's the point at which you might go and have a knock on the door of the bank manager. But I always try and avoid that if I can until I absolutely have to. Okay, that's me. Sorry, I've probably gone on too long too. Yeah, don't worry about my reflections. I think I've probably be stopped there.
Okay, brilliant. Thank you very much, Tom. That's really fascinating. It's really good to see what works and the success you've had with it. Really, I'm sure there's definitely people on the webinar this evening that will be very interested in hearing about those figures and the scalability and all of that, which is really good. So thank you very much. Just before we move on to Daniel, who's going to give us a give us a rundown of the work we're doing with the landscape recovery projects in the Waveney and Little Ouse catchments. I would encourage everyone on the call, if you've got questions, please do put them in the question and answer box. Hopefully you can all see that on the bar on your screen. This is your chance to really grill Tom and Phoebe on anything that comes to mind, really. As many of you will know, hopefully all of you know, Suffolk Wildlife Trust work with a number of landscape scale groups of farmers and land managers. They're not all farmers. Three critical ones at the moment. So the Blythe Valley Farm Cluster, where we act as a facilitator, bringing those farmers together. They cover just over 2,000 hectares of land in the Blythe Valley in East Suffolk, and have around 20 members. There's also the Suffolk Wall Towns Farmer Cluster, who are south of Bury St Edmunds in and around Lavenham. They're now over 5,000 hectares and 25 members. And then the group that we're working with on the landscape recovery pilot currently is the Waveney and Little Ouse group, who are, for the project, have committed 1,700 hectares of land to develop their approach. I will let Daniel rattle through a quick introduction on this, and then we will hopefully still have time at the end for a few questions. So thank you. Do keep the questions coming in, and we'll come to those afterwards. Okay, Daniel, over to you.
Thank you very much, Sam. Thanks for that nice little introduction. So the Waveney and Little Ouse Landscape Recovery Project. I'm starting today with this slide of kind of where we will, kind of the landscape we want to see at the end of this. I think this is at one of the reserves in the network that is the Waveney and Little Ouse cluster. And I think this is Redgrave and Lopham, this picture's taken, but it's an example within the landscape of kind of how we'd love that to spread out along that river valley of the Waveney and Little Ouse. So next slide. I'm doing my best Chris Whitty today. So today I'll take you through our kind of project overview, the kind of area, what we're trying to achieve. So early objectives and aims. So the landscape recovery pilot began at the beginning of this year, so we're still fairly fresh. But I also want to look at what our kind of planned work and delivery is, and always kind of referring back to the wonderful talks that Phoebe and Tom have just showed us, and try and think about how all this links together. So next slide, please, Sam. So just as a general introduction, so Sam has mentioned that we've got 1,674-ish. It changes around that point for hectares from 20 landowners, which were submitted to be within our project area. So for the landscape, we can't see too well on this map, but this is pretty much between Diss and Thetford on the Norfolk-Suffolk border. Importantly, and as I've mentioned, we have existing nature reserve network within the cluster. So these act as kind of refugia of high quality habitat in the landscape that are being considered an important asset as part of our landscape network here. Our landscape recovery project has a focus on the riverine and floodplain elements, specifically looking at water quality. and how agriculture can implement towards that. And it's a motto that gets banded around quite a lot in various different circles nowadays, but this bigger, better and more connected when we're talking about habitats and nature. Next slide, please, Sam. So this slide here was actually, I kind of nabbed this from a slide I took quite a while ago, but we asked at the kind of beginning of the project, what does our cluster want to achieve? So I asked them how ambitious they were. Obviously, I'm not going to go into detail of what classifies very highly ambitious, but generally speaking, everyone was very keen to see good changes in the landscape. And the three kind of things that stuck out were that we were looking at water quality improvements, a better connected floodplain interspersed with habitat mosaics. And some species were mentioned. We've got nightingale, turtle dove, and barn owl here. If you can't tell I'm a bird watcher, you haven't been paying attention. But yeah, next slide, please. So kind of onto the aims and objectives of the landscape recovery is, as I've mentioned, it's still early, but I think these overarching aims will kind of underpin the project as we go through. So we're looking to reconnect the landscape as much as possible through landscape scale changes. We're looking to provide the opportunity to halt and reverse species declines locally, especially including those associated with riverine and wetland habitats. Looking to discover and produce a viable business opportunity for investment through nature and climate-focused industry through blended finance. And we want to engage positively with the local community and provide a glowing example of how landscape recovery can fit into the future of agri-environment schemes. Next slide, please, Sam. So I won't go into the nitty-gritty details of exactly how each of these work packages kind of come together towards this landscape recovery project. But the idea is that we're looking at this from many different angles to try and answer as many questions as possible, some of which we will have been demonstrated through Phoebe and Tom's kind of presentations earlier. We've got our land management plan and looking at the kind of uplift and the baselining of the habitats, both riverine and terrestrial. We're looking at modelling the landscape and the water flows through a GIS-based approach, HydroGIS. We're looking at a farm business impact assessment, which will be kind of confidential advice to the landowners on whether this is the right thing to be taking up, which we hope very much that it will be. We've got stakeholder engagement plans. This isn't all directly about nature, but we were looking at the social aspects as well and how we can bring the local communities to engage with the landscape, recognising the importance of that from many different angles, including things like mental health. We've got that carbon baselining and uplift, so we're looking at it from a carbon perspective as well as kind of the habitats and BNG. And then obviously we'll need our legal advice on how we set everything up towards the end, and the blended finance approach, which you've all met Tom, and we've also got George on the call from 3Keel who are helping us out with that. So next slide, please, Sam. So by doing these work packages, we are looking to deliver options essentially. So the first kind of option that we're trying to get is a quantified biodiversity net gain uplift option, which is going to look based around a calculated DEFRA biodiversity metric 3.1. I think the fall's come out recently as well, but that is a calculator that helps us quantify a credit-based system looking at habitats. Quantified carbon sequestration options, which will look at both woodland and wetland. We're working with Wilder Carbon on this. We're looking at quantified models for change in nutrient flows, flood risk, and strategic suggestions on most impactful options for the landscape in these areas. So this is looking at these modelling and GIS, which is geographical information system. Essentially looking at maps. And we've been mapping these options in a way that makes these models look at where are these measures going to be most effective within the landscape. And I mentioned about the social outreach. We want to quantify how much social outreach opportunities are there with the local communities and what does that matter to the local community. And then towards the end, we want a legal entity capable of receiving and administering private finance income to the farming cluster. So we're talking about how complicated it could be with many different streams of income coming in. If we produce this legal entity that kind of receives it, it takes actually one stage out of what the kind of investors and buyers are going to have to do, which kind of, I guess, would make a more attractive proposition in that regard. But all of this kind of works together towards our overarching kind of delivery goal number 6, which is a healthier river valley with both environmental and economic stability, with improved biodiversity, water quality, and opportunity for nature exposure for the local community. Next slide, please, Sam. So just going to run through some of the stuff that we've already got in these kind of early stages of the project. So our project is running for 2 years. It started back in the beginning of January, but we've already got some fantastic work. Everyone is working full pelt. It really is quite full on. So we've got some early options for woodland carbon uplift here. So we've got, this is looking at woodland creation, woodland enhancement, and we've also got scrub creation, scrub enhancement. We'll also be looking at this from a wetland perspective. And we'll also, when we get to the point where we know what we're going to have where within our landscape cluster, we'll have a more costed version for what those measures look like on the ground. So next slide, please, Sam. Talking about BNG, baseline uplift options. I've mentioned the dephrometric calculator here. That's kind of what it looks like on the base behind there. It's a nice complicated Excel spreadsheet. And then we're doing the mapping side of things from a UK habitat classification perspective. Which helps calculate the kind of credits and units that are based in that calculator. Yeah, we've got those options on paper. We're just mapping them at the moment. Next slide, please, Sam. And model floodplain output options. So this is the hydrological GIS approach that Viridian have done for us. So from this here, this area of land, you can see the kind of river Little Ouse kind of just running through the base of the land there, and these kind of glowing options of various different colours. The linear kind of orange options are where suggestions for kind of high impact leaky log jams, and then this yellow is actually a kind of off river floodplain water retention and then restoration of floodplain, really. So those kind of suggestions and strategic locations are the kind of things we're getting from these outputs. Next slide, please, Sam. And just looking at that same area, we get I went through how many layers, there's so many layers we've got, which are fantastic, that show these kind of, so for this layer here that we can see, this kind of intensity of green is where woodland within a landscape would be at its most beneficial for reducing nutrient runoff into the rivers from a pollution perspective. So it's integrating those models with what is possible on the ground and what we want on the ground. So some of this habitat might very well, I'm not saying it is or it isn't, but if this was a kind of a fen habitat or would lend itself better to a wetland ecosystem that would be better for biodiversity, it might be that would be the thing that would be most better for the environment and nature, but also looking at it from the different financial systems. So it's about integrating all these options together in this kind of, yeah, I guess we're talking about mosaic of habitat, we're talking about mosaic of finance options. Next slide, please, Sam. And then this is a slide I've just taken from Tricolour, who've been working on our stakeholder engagement plan, but, you know, we've been mapping out our kind of internal, externals, and, you know, potential external audiences within the local area. How do we engage these people? How do, you know, where do we start? And we're just trying to kind of tease that out at the moment with these stakeholder engagement plans. Next slide, please, Sam. And yeah, this slide kind of harks back in a much more simplistic way to some of the stuff that came out of Tom and Phoebe's talks. But we were talking about kind of the options that were coming together and what we can do to provide services for the environment, and also who does that benefit. So we're kind of identifying these mosaic of quantified nature-based solutions, both with and without unit-based metrics, and then identifying who benefits from those options and what benefits exist. So we've got this improved water quality, improved biodiversity, community outreach, etc. And then we're identifying the investors who benefit from those implementation options. So could this be through biodiversity net gain needs? Could it be through carbon credit needs? Things like water companies, we are water quality. So we know that there could be engagement with and interest from them. But yeah, this kind of ESG, which is environment, social, and governance investing. So kind of a lot of businesses are looking at their outlook essentially, and what do they look like to the buyer of their product, whether that be nature based or not. But they want to have a good green outlook. So is ESG investing going to be an option as well? It seems to be one that's cropping up in quite a few talks that I've been having recently. So it's something I've included here. Next slide, please, Sam. think we're getting towards the end. We are indeed. Yeah, thank you for listening. I rattled through that a little bit quicker than the others, possibly. But that was the idea, so we've got plenty of time to talk.
Excellent. Thank you, Daniel. I will stop my screen share now and ask everyone to come back into the room. Yes, thank you very much. Thank you all, everyone who's presented, Daniel, for that introduction to the project. I think it's hopefully apparent, but perhaps not. There's a lot of different ways to think about this. There's a lot of questions that we need to answer. There's a lot of work we've got to do to get through the process. Yeah, there's a couple of questions that have come in, which Phoebe and Tom have kindly answered in the Q&A here. As we don't have any additional, I wonder if just quickly, if Phoebe and Tom, if you want to, maybe Phoebe first, if you want to just run over your answer and add any detail.
Yeah, there was a great question around local nature recovery strategies and who develops them. And that was from one of the considerations I listed as an example in milestone 1. So in summary, local nature recovery strategies are being developed by local authorities. They're required now of the Environment Act to take that kind of spatial planning when it comes to nature recovery. So if your local authority has made headway on that, then it's really good to link up with what they've already done, because they might have great data, interest in environmental markets or nature finance. They basically will have a more holistic view of what the landscape needs, and you can tap into that insight and basically save yourself some time. But more generally, it doesn't need to be a local authority who has that insight. You could work with rivers trusts, wildlife trusts, even community groups, other stakeholders in this space to basically say what has already been done, what research has already been undertaken, and where do I fit in with that. It's prompting the reader to take a collaborative view and work with others and not work in isolation. So I think that's a really good call out.
Yeah, excellent. Thank you, Phoebe.
I just build on that to say that that's been, just exactly what Phoebe's saying there has been critical to being able to have the kind of permission almost for us to develop our lens marketplaces. It absolutely matters that you don't ride roughshod or operate at cross purposes with those sorts of plans, and that you use the buy-in and support that they've got when you're doing, whether it's lens or any other kind of marketplace, really works. And that's in the UK, or for example in Hungary, we definitely talk to local government first and understand what the local politics is saying and incorporate them in the conversation. So it's really critical stuff. Sorry.
Thank you, Tom. Just to give a bit of local context around Suffolk specifically, the guidelines around how to develop and what a local authority has to do around a local nature recovery strategy have only recently been released. And I understand they've got slightly less than a year to come up with something. In Suffolk, the County Council are likely to be the competent authority. They are collaborating with the Norfolk County Council as well. So in the context of the Waveney and Let Loose project, which Daniel just introduced, which runs along the border of both counties, it's quite an interesting test case to see how those two councils working together deal with things like that. And we are definitely talking to them about it on a regular basis. So yeah, it's all out there. And then Tom, there was a question for you, which I thought was quite an interesting one around working with large industry in certain localities and that being a benefit to the lens approach. But how would you do it in an area where there wasn't a large industry player seeking to fund landscape outcomes? Yeah.
I mean, I think the key thing with landscape enterprise networks is it's about finding funding consortia. So actually, for us, it doesn't work if there's just one. You need more than one organisation with an interest in funding the same packages of measures, essentially. And so we're matchmaking always to do that. But it's absolutely the case that so far in all our marketplaces we've tended to deal with fairly big operators, whether it's a water utility or food manufacturer or a beverage manufacturer or an insurance company, or a public sector organisation, a local government with a flood risk remit and budget, and so you know, I suppose I'd say a couple of things. One of them is we've done that partly because we just got started with Lens, and it's simpler and more straightforward to deal with bigger organisations with big budgets in the first instance, because that can get things moving. So that's one very pragmatic reason we've done that. The second thing I'd say is, particularly in a landscape like the UK, actually most regions have really quite big commercial interests in them. They're sourcing from landscapes or have dependencies on landscapes one way or another. There's big money around and next to landscapes in the UK almost exclusively, including in more remote spots. I mean, we're doing some stuff with distilleries and infrastructure organisations up in Scotland at the moment, in places where you'd think, well, where's the regional economy here apart from a bit of fishing and stuff? Well, actually, there's quite a lot of big monetary financial dependencies on some of those landscapes. So there's often money to be had. But if there's no commercial wind blowing, then Lens probably isn't your solution. You know, Lens is good at getting money from the regional economy, which has skin in the game in the landscape, putting it together and deploying it into a landscape. Well, if you've got no regional economy, we can't do much. And Lens is only part of the picture, isn't it? It's been very good at funding certain things in certain ways.
Yeah, I think it's definitely that point. It's a great example of what works, or what one way of making something work, but it's not the only answer. And you know, with projects like the Landscape Recovery Project, we're looking at things like Lens, and maybe that's a solution to some of what we want to be delivering. But it's very likely that there'll be other buyers, the credits market, the finance approach, all of that sort of stuff is going to be relevant to us in this project. So it's definitely worth remembering that it's not the only answer.
Exactly. You know, and I guess just to very briefly say on that, I mean, that's our experience too. When we've looked at a landscape and what are the opportunities, then I often think of it as a fruit salad approach. Really, there are different bits of that landscape you market in different ways, essentially, and you want to segment it, and you want to segment your marketplace. Sorry, Phoebe.
No worries. I just wanted to build on that point to say, you know, great point around how there are different models within nature markets, nature finance, and environmental markets that you can try. But also, it's important to clarify that we're not excluding public finance from this equation as well. So public funding, traditional grant funding and agri-environment schemes, it's definitely on the agenda to find ways of making private finance work with government and philanthropic sources. So, you know, The Wire, for example, had a series of private buyers, but the Environment Agency actually came in as the biggest buyer. We say buyer is to mean they're paying for an environmental service, even though they're not private. They came in as the biggest buyer in that equation, but that allowed other players such as the Wire Council, United Utilities, and the Regional and Flood Coastal Resilience Committee to come in and add in more money on the buyer side to get to that point where they could fund the natural flood management project. So people get quite it's quite an emotive topic when you talk about using private finance in environmental markets, and if it can be completely funded by private finance, that could be a great solution. But you've also got this topic of blended finance with public and private money in the game.
They're all buyers, aren't they, Phoebe? You know?
Yeah. This idea of paying for an environmental service, you don't have to be a private organization to recognize an environmental service and pay for it. So, yeah,
I would say that the role of public funding in this, it's worth it can be framed in the same way, in that people in the landscape, taxpayers, are deriving those benefits that the businesses might be also interested in paying for. So you could well treat the public purse as very much as the same as those private buyers. Okay, well, thank you very much. It's been really great to hear from both Phoebe and Tom, and thank you, Daniel, for the introduction to the Wading and Little Lewes project. Thank you, everybody, for your attention. We're just about at time now, just a little over, so I will let you all go and enjoy your evenings. this recording will be available on the Suffolk Wildlife Trust website or YouTube channel. I'm not quite sure where, and we will send round to everyone who's registered a link to that in due course, along with some links to the relevant resources. So yeah, thank you very much.